So thank you for joining us. Julian was just giving us a quick touch up on everything that is happening on the macro level on BTC, DeFi, and RWAs. So once again, introducing Julian, CEO and co-founder of IXS, and co-founder Aaron on today. And yeah, passing it over to you, Julian.
Okay, so we'll just start again, fresh.
Yeah, I think we might have
Okay.
to.
All right. Okay. So I'll call you later, Aaron. You've just heard this one probably. All right. Sorry about the technical glitch. Let's jump in. Tons of stuff going on. I'll see if I can just recreate that last um 10-minute update. So yeah. Okay. So lots is going on. I think um the most recent activity around USA Trump administration bullishness is incredibly significant. I'm referring to the Genius Act that's been signed into law, which is basically rules for stable coins, and going from a marketplace where stable coins were illegal or there was no rules or no one really knew what the rules were, et cetera, to the US government saying, we want stable coins and these are the rules. Right. And you've seen this rhetoric coming from the Treasury Secretary Scott Bessent, the Commerce Secretary Howard Lutnick, Trump himself. Um, what the US government always wants is everyone to use their money because then they're in control of the world, and then they make up their money because they print it out of thin air and then look around the world and they're the superpower, and that's how they've got to this point. So what the US government wants is more stable coins now. They understand the power of stable coins. They understand it's much easier for billions of people in the world to get their hands on a stable coin than it is to get on a fiat dollar and have a bank account. It's very, very difficult for probably more than half the world, maybe more, maybe it's, I don't know the number, it's in the billions and billions of people. They cannot get a bank account and get US dollars. So everyone runs around with US cash, but the US dollar as the dominant currency is prevalent all over the world, right? In every single asset per se, trading, etc. Some countries don't even use the US dollar, and they don't even really use their own currency. So what it means is, if we think about this from an RWA perspective, is that the real formation of the real the successful beginnings of the RWA space was really only a year or two ago, when um, people started tokenizing treasuries. They were paying 4 or 5%, and $150 billion at the time of stable coins were earning no yield, and they've earned no yield since the beginning of time. But they started saying, oh, well, let's take our stable coins, let's buy USDC, USDT, and let's buy some yield bearing instruments and make some yield. So then we started to see the very first assets that got traction in the RWA space. Treasuries, money markets, yield producing, Wall Street, US quality, low risk, et cetera, et cetera. So the significance is then that $150 billion of stable coins, and a very small percent of them actually bought tokenized RWA. Um, that started it all off. So if you now have the US Commerce Secretary saying we want trillions of dollars of stable coins, and he's not saying euro stable coins and Singapore dollar stablecoins, he's saying US dollar stablecoins, they're going to drive that forward because there's potentially a sinister but reality check. And I mentioned this 10 minutes ago, but there's other people that write in depth, very, very detailed analysis about why the US government now wants stablecoins to grow. Crypto Haze did the best one that I've seen recently. And a long story short is that the US government and its system of fiat money printing systems and selling its debt to other governments and getting people to buy US dollars, et cetera, it massively benefits from stablecoins, because the key takeaway that I have from the Genius Act, which is the stablecoin rules, that's called the Genius Act, um, is that if you want to do it properly under American law, you can get supported. You must go and buy treasuries with those dollars that people give you, right? So it's now saying, Tether, you're welcome to come to the US legally, but we want you to you must buy US treasuries with the stable coins that you have. So Tether's like, great, let's do it, right? So it's just a significant, probably one of the most significant events in all of crypto related to RWA. Because if $150 billion can get us a couple $1 billion of RWA investment, what does a couple of $1 trillion get us, right? And we only just began. So out of that $150 billion of stablecoin holders a year or two ago, a very small percentage started buying RWA, but they did start. Now it's growing. So if we can get much higher percentages of stablecoin holders seeking yield, which we will get, because now we're moving into a much more adoption, wide, broader adoption, capital markets adoption, TradFi adoption. These are businesses, they need return on investments. If you're sitting down with a fund manager that's got $1 million of stable coins and saying, do you want to earn zero or do you want to earn 5% with an RWA treasury token? 99.9% of them are going to go buy that RWA. That wasn't the case before because it's a larger percent of stablecoin holders weren't companies or businesses, they were crypto bros or they were crypto investors or they were individuals. And we said this again previously that individuals are nowhere near as incentivized to create return on investment for their assets as companies and money managers and fund managers are. Because the fund managers and the money managers and the companies, they're typically rewarded, performance rewarded by how much money they make and if they're making any money at all. So if you think the concept, I gave an example before, Bob's got 10,000 Bitcoin and ABC Treasury Company has 10,000 Bitcoin. Bob's okay to sit there and just wait for capital growth and do nothing. ABC Treasury Company, they're going to get paid more if they make more money. So do they want 10,000 Bitcoin sitting idle or do they want to go earn 5% on that, which ends up being like $50 million a year extra? And then they'll get their 20% performance management. And then it's very obvious the incentives. So always think about the incentives for this. The incentives for the Bitcoin treasury companies and any business is to generate a highest possible return on investment, right? And that's essentially obviously very bullish on what we're all doing over here. The other important update, and today we're very much here to talk about all the things that we've been doing. I think there's been some misunderstanding because we haven't mentioned it so much recently about all the incredible partnerships, works, technology, and all the things that we've done historically in the business, especially in the last 6 to 12 months. And some people think we're only doing BTC Real Yield. That's not the case. Couldn't be further from the truth. That's our latest product launch. When you launch a new product, the world's extremely noisy. We need to get out there. We need to make a lot of noise. We need to focus and we need to get people looking at that. Usually only get 10, 20 seconds of people looking at a message. So we specifically on purpose said, let's just talk about BTC Real Yield for a month or two to get the word out there. We almost did such a good job that everyone thinks that's all we've done. So I actually take my hat off to the marketing team to say, you did such a good job. Now everyone's complaining that that's the only thing we do, which is clearly not the clearly not the case. So well done, marketing team. Now we're also going to now put out, frequent updates on all the other stuff that we're doing. So it was a specific decision made from the business team, myself included, and it's worked because we got the word out there. And again, maybe it worked too much for some of our community. That makes me laugh, but it certainly doesn't detract from all the incredible things we've built and we've been working on nonstop the whole time, from our union chain partnerships to our fintech partnerships to the new decks coming out, all these kinds of things. So anyway, we'll get a little bit more to that. Aaron will talk a bit more in detail about that later on, but I just want to continue on here on the sort of the macro updates. And the other thing I think is very exciting is that we've started to see the proliferation of these Bitcoin treasury companies, also digital asset treasury companies. They're known because they're now spilling over. So we have multiple, I think 70 or 80 listed public listed company globally, started in America where it always does, Japan now, and we're starting to see that move across the world. And it's really interesting to see the other assets, the other tokens, treasury companies. So we've now got a couple of Ethereum treasury companies, Consensus, Bitmine. We know the founders there. We've now today seen the announcement of um, 10x Capital and YZ Labs, which is Binance's family office, I think, or CZ's family office. They're the first $500 million BNB treasury company. And that's very typical, I would say, for past cycles. It's not typical because this is the first time we've ever had this business model, which was raise money, buy Bitcoin or buy a BNB, and just that's been the model. It's very, very unique. It's weirding a lot of people out, but it's going like wildfire. And there's a reason for that is because Bitcoin's been the best performing asset in the history of the world, as is lots of other tokens around it. But also because um, the model itself is raise money by Bitcoin, and the typical structure right now, or the typical situation, is the shares of the stocks, because these are public listed companies, and private companies are doing this as well, but it doesn't work the same way because they're not public. But the public companies, the shares are typically trading at a premium to the NAV, the net asset values, the total value of the assets of the company. And to keep it simple, if the company has $100 of Bitcoin, the shares might be trading at 110, 130, $150. Um, there's a premium there. In that premium, the company makes money, right? The managers of the company make money. So there's this extraordinary profitability today in the model, and it'll change and probably change every day, to attract. It's so attractive that people are going to be launching these non-stop for the foreseeable future, and they are. All right, there's probably thousands of private companies that have Bitcoin treasuries, and now there's nearly 100 public companies, and that's growing rapidly. And a lot of them have just Bitcoin, and they actually still have a real business. And then a lot of them now, that's the only business model, right? And so it's really exciting to see that, because that's all right in the firing line of what BTC Real Yield product is. And again, that's not the only thing we're doing, and we'll talk more about what else is going on. But companies are incentivized, company managers are incentivized to generate real return on investment for their businesses. So if they're sitting on billions and hundreds of billions and trillions of dollars of Bitcoin sitting idle, our product meets fills a very, very important need for them. Regulated, compliant, real yields, and no one else is doing that right now. So that's extremely bullish for us, and I'm very excited. But we're now seeing this spill over. So there's a lot of people in the altcoin markets who are upset, angry, grumpy, priced down for a while now. We all hear that. We all feel that. We're all in this together. We're also the biggest IXS bag holders. So anytime price goes down or something negative happens, it affects our core team greater than anybody. So I think community sometimes forgets that we're here without the most skin in the game, doing all the work. So we're all aligned, especially the team and the community, on trying to drive the value of the project and drive the token up and become the leading RWA player in space. So, and it's just hard work. It's very, 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 very hard work every single day, 24/7. So we're still committed 100%, and we're very bullish on what's happening. But that was just a note there for some of the new people to the community that, I don't know, might think that we're just mucking around over here when we're deadly serious about what we're doing, and the assets of the company and the core team. Our fortunes are tied to IXS a lot more than anyone else's fortunes are, because this is what we do all day long. That aside, the interesting thing that's happening now is that there's a lot of negative sentiment in the altcoin world, and that's purely because everyone looks at price, and that's generally all that anyone cares about. Um, and it's down, right? It's down to 90% of the market. So that's not great, but that's absolutely normal for where we are in the so-called cycle. And as we've just seen Bitcoin driving the Bitcoin treasury model, which has multiple different names because it's so new, you're now starting to see that spillover. So Ethereum, SWI, BNB, TON, there's a whole bunch of new treasury companies copying Strategy's model for different tokens, right? Um, and already that is a sign, right? As a physical or visual sign that when more money comes into Bitcoin, it flows to the other tokens. Now, this isn't even token price I'm talking about. This is like, here's a new model for Bitcoin, and people are like, oh, okay, let's do that model on Ethereum, and let's do that model on SWI, and let's do that, let's copy and full rest. So I don't see why there's any reason that, this huge inflows of capital to Bitcoin are now coming for Ethereum, right? Ethereum ETF just overtook Bitcoin this week in terms of inflows. Um, all that capital eventually spills over into the altcoin market, and that's how it's been for the last three cycles. It has to, the cycle has to completely change or not exist. But I think that the history of this asset class and industry is that, and it's the same in big tech stocks, that most of the money goes into big tech stocks, and once they really start to go strong, people start taking profits and going further out the risk curve, further out to the smaller stocks, further out to the altcoins. That's how it's been. I didn't make it up. Look at the data. This is the cycle. So anyway, I think everyone should relax a little bit and sort of, be very happy that Bitcoin is what's happening to Bitcoin is happening. Some people aren't that happy about it. They're all wondering where their bags haven't pumped. It's like maybe it's just maybe it's not the time, maybe it won't happen this cycle. I believe it will, but all that capital coming in is growing. It's growing like crazy, right? And we know that there's not just going to be Bitcoin, although it's the king. So that's just my two takes on it, because I get people yelling, screaming all day long about price of this and that. Um, but that's we should try to sort of maybe trust the process or trust history to sort of maybe repeat itself in a similar way with more capital than Bitcoin's ever seen in the history of time. There's an American billionaire on CNBC today saying every company on the listed company in 10 years will be a public Bitcoin treasury company. Like, I don't know, I don't necessarily agree with that, but that's kind of the momentum that's building out of the states, which is taken all throughout. So anyway, that's sort of some of the key stuff that's going on that front. There's a lot of really exciting discussions we've got going. We've had to get through months of Derek legal team been doing a great job, months and months and months of complexities around regulations. The regulations have been changing in many jurisdictions. Um, Non-stop. I mean, regulations generally do. I mean, in America, they're finally getting clear regulations where they've just been all over the shop. So it's just part and parcel of the industry, the business, our model that we've got to deal with this. That set us back a couple of months, but we've got some new custodian partners that we're talking to bring more and more capital into our products. And we're not going to mention any of those names until they get done. But yeah, hard at work and everything's extremely positive on that front. And so I think that's a fairly good. It's not as good as my first 15-minute rave, Gene, but I think I got 80% of what I was trying to get out before. Um, and then I think ultimately, yeah, what have we got now? We want to talk a little bit more about what's going on with partnerships. So I'll let me add a little bit more about our previously announced partnerships, and then I'll pass the mic to you and Aaron for a bit. But um, like W- Yeah, I just want to touch on this for a bit. So you're now starting to see for the first time ever, actually it's not the first, it's the second time, but most people don't know the first time a couple of years ago when Binance and FTX tried to launch tokenized stocks illegally. So let's forget that story. It's done. Now you're starting to see this new acknowledgement and understanding from the biggest crypto exchanges and fintechs in the world that RWA is going to make them a lot of money. All right. So that's how I put it. It's going to make them a lot of money. All right. Do they really care about decentralization or tokenizing this and that? Maybe some of them do, some of them don't. But what matters most is where's the money? Where's the incentive, right? So years ago, we believed that all crypto or all fintech companies, Web2, Robinhood, would add crypto, and all crypto exchanges, Coinbase, would want to add RWA. Because once you've got millions of users, just like a bank, you just want to sell them more things. So whether you like it or don't like it, trust it or not trust the wrong, whether you like it or don't like it, buy it, don't buy it, doesn't really matter. You're going to start to see this convergence and everything's going to be digitized and everything's going to be platformized. I think I made that word up. So but that's the reality, right? And now you're starting to see it this year. You've seen Kraken announce for doing tokenized stocks. You've seen Robinhood say we've got to do this. They're petitioning the SEC to try to get it done. Kraken said the same. Kraken, Coinbase has said that stuff. They said similar things, and we've been in discussions with some of those names we just mentioned and others. How do we help them, make this happen? Now, the reality of that is it's very complex. When you have a license for a specific asset, whether that's crypto, whether that's commodities, whether that's securities, whether that's forex, whether that's derivatives, that's what you're allowed to do, right? And how you run that business and how those assets operate is generally pretty unique to that license and that model. So you can't just start throwing in different assets very easily. First of all, you've got number one, regulation issues. Are you even allowed to sell commodities on this platform? Are you allowed to sell securities on this platform if you have a license for something else? And the answer is typically no, right? So the point I'm trying to make is that like you're now starting to see the actual mental adoption or accept mental adoption, wrong word. You're starting to see the acknowledgement from the best and biggest companies in the world that this is where it's at. Right now, they've got to work out how to do it. Right. So we've been positioned our businesses at the core of that since day one. We've been building towards, and we didn't build towards Robin Hood. I would say that sort of openly. We didn't build towards Web 2. We built towards Web 3. We built towards companies that would want to put real asset tokens of institutional quality on their platforms for their millions of users in a legal and compliant way, not all the crazy rubbish that goes on out there that never scales and that runs into a million issues, or platforms that come and go and no one that don't want licenses and want to avoid all the stuff that you need to do. So we're now starting to see exactly what we've secured already. Right, we've secured partnership with Union Chain for crypto exchanges in Southeast Asia, Japan's super app fintech line with 200 million users. And again, they're the first ones ever announced in the world of anything like this before, and they take a very long time to get together. So the Union Chain was a year and a half or so of negotiations between all the founding teams, and now we've got to work out. We know how to do it, but now we've got to work with these companies and their compliance and their legal teams that are sometimes 50 people in a room, and their 4, 5, 10,000 employees, and the regulations and all the things that they're working through to make sure we can get these assets available for those buyer pool. So it's the end game, it's the big game, it's the long game. It's certainly not the instant every snap your fingers and make that happen. There's an insane amount of complexities to iron out, from legal, regulation, marketing, technology, operations, asset management, asset flow, pricing, et cetera, et cetera, et cetera. Right. But it's all happening, right? So it's one by one by one. So we've actually been able to achieve that, at least the very first, from my knowledge, of real traction. A lot of these people make announcements and it's all hot air. When you peel off layer one, it's not even there. Tokenized stocks is a good example as well. Like, tokenized stocks is currently a big theme in the big companies, and it'll get worked out. But the previous offerings in the market haven't been so legal, and a lot of people haven't been able to list these things that are available because they don't make any sense. Right? That's the bottom line. I'm not going to name names. People are trying hard. Everyone's a startup. They're trying to make it work. But you've even had Citadel today saying that no, they don't even want tokenized stocks, and here's the reasons with the challenges. You've had other big companies, and there's a lot of people that are just trying to protect their own patch. So a lot of the TradFi banking world's going to say we can't do that, don't do that, it's illegal, just because they've got they're earning fees from the old system and they don't want any competition. That's certainly a factor that's true. But my point that I'm just trying to make is that even the biggest guys in the world, Coinbase included, have been trying to work out the structures for these tokenized stocks. But everyone knows it's the end game, but it's not easy to get there. So we've been in there, we've secured some of these key partnerships. There's a few more in the pipeline as well. But to get them actually from to get the negotiation done is one hurdle, to then sign the contracts is another, and then to build out one by one, dealing with all the things that each platform needs to be worried about because they've got a license for their crypto in their country, and it's complex. But anyway, that I just wanted to give a bit more color to that, because people think, oh, we should have a new announcement every 5 seconds and we should be seeing those assets on those platforms. Like, almost no one on planet Earth has got like, none of the big guys yet have really got legal compliant RWA out there, maybe one or two. But most of the things that people have heard in the marketplace is, we're going to do this, right? That's our plan. And that's great. You got to start there. So we actually are ahead of the curve in many instances. And then when you actually go and work out what these people have done yet, it's not even live yet, or it's coming soon, or they're in their own, stuck in their own, you know, Tai Chi session with regulators, which will go on for 6, 12 months, whatever. Anyway, but that's the nature of the beast, and that's just a fact. But I was just making that point that, we're still building out these key partnerships and relationships and looking for more of them. But if we don't have anything to say, anything new to say, well, then we don't say it. But I guess we've always got this growing community. We've got new people coming in every day. We've got to be. It's on us. It's our responsibility to update more frequently about what we are doing and what we have done, as well. So we definitely appreciate that feedback that we're going to take action on. And Gene and the team have already made moves, starting with yesterday and today, to make sure that we keep the broader mission and activity and achievements updated as well. So that's enough from me for now. I'm going to pass it to Gene and Aaron. They can take it forward. So hopefully that was some good updates for everyone, and offers a bit more clarity on what's been going on.
Hey guys. Yeah, I just wanted to touch a little bit on the BTC product as well. There seems to be, I guess, a little bit of confusion, as Jules mentioned. Um, but the way that we are looking at BTC right now is really, it's just the currency to purchase the RWA assets that we are still launching off IXS. Right. And the reason for that is if you compare the BTC market versus the US dollar market, the US dollar market is a very crowded market right now. And there's a lot of competition in the on-chain world, right? I mean, if you look at Even Athena right now, they're probably paying about 8%. If you look at private credit deals in the market with US dollars, you're getting about between 10 to 20%. Kendall's offering US dollar point farming, giving you 20, 30, 40%, right? So that's the market that we were initially competing in with our original products that we had on IXS. And why we're so focused on this whole BTC product right now is because of what Julian had just mentioned. The liquidity in the market has increased significantly on the BTC side. We're seeing a massive convergence of companies, TradFi companies, buying BTC now just to keep its treasuries as a diversification uh, asset against the US dollar, right? So, and the flip side of that is that if you look into the BTC market today, BTC5, BTC yield, there is hardly any options for investors to earn yield off BTC. Yes, you have basic trading arbitrage funds that are paying between 6 to 8% currently. You have RV and lending platforms paying between 0 to maybe 1.5%. And then you have some other type of Pendle type investments, which is giving you altcoins, which maybe can pay up to 10, 20%, right? But you know how those type of programs generally don't end very well because they're just giving out the tokens at the end of the day. And so the unique proposition of what we've come in with the BTC product is that you can take your BTC and purchase, well, you can take your BTC and collateralize it with us, and we'll loan you US dollars at zero cost, right? And what we're doing with, and what we do with those US dollars is that we're buying real world assets with those US dollars, right? So what we're seeing here is that we will start accumulating BTC on IXS, and on top of that, we are leveraging up our capital to buy RWAs on top of that. So that would be effectively a 1.5x TVL for every Bitcoin deposited on IXS going forward. And the yields, and because a lot of the TradFi companies are coming into the space right now, they understand the product a lot more than the crypto guys, right? We've over the last 3 weeks or so, the sales team has been going pretty hard at contacting a whole bunch of hedge funds, miners, TradFi companies, asset managers, to market this product out to them to start building the pipeline and book. What we've found is that a lot of the asset managers have taken a lot of reception to this product because it acts as a diversification function for their clients' portfolios, right? And if you for the yield functions that I had mentioned before on the BTC side, right? Basis trading yields or arbitrage yields generally go to almost zero during bear markets. That's what we've seen in the last couple of years, and that was actually the reason for the rise of treasury bills in the first place, which were on chain, right? So the diversification function of this product has been a lot of interest to the asset managers, and also to a lot of the crypto miners, because the strategy that we're using, they actually deploy these type of structured strategies on their own assets. All we'll be doing is we'll be allowing them to leverage against that structure already and give them additional yield on top of that. So this is a reason why we're so focused on this product. It's the first in the market. Everyone that we've spoken to has not seen anything like this before. And this is why, we're going to keep pushing this, and that's it. This is not, we're not just dropping everything else. The RWAs that we're buying still feeds into the DEX, still feeds into the Launchpad at the end of the day. So it still adds to the overall ecosystem. And I guess that's something that I just wanted to clarify to the community, that we're not moving away from RWAs and focusing purely on Bitcoin. Bitcoin is just a currency and an asset for us to tap into, which seems like the most liquid asset for us to, seems like the best direction for us to move in right now.
Yeah, that's a good point. Maybe we're too close to the coalface. We didn't know that would actually be an issue. If you forget, if you all the loans and whatever the product information you might have read, all this is instead of saying there's a whole bunch of people out there with fiat, there's a whole bunch of people out there with fiat, they need to go buy a stable coin to then buy an RWA, right? That's been the history of how you buy an RWA. There's no other way to do it. All right. You got to get a stable coin. Now we're saying, let's continue to do that. But hey, there's this $2 trillion asset that we all believe is going to go to 100 trillion. 99% of it does nothing. People can now say, well, instead of going to my bank account to then send dollars to a crypto exchange to buy a stable coin to then buy an RWA, I can just use my existing RWA. I can use my existing Bitcoin. I'm not going to draw fresh capital. I'm going to use it like people use their houses to borrow money against the asset, and then we create those loans, and then they can invest into the fixed in real yield. But what it is, it's just a brand new channel that's never been tapped before to bring more capital to our RWA and our TVL. That I think somehow got lost in translation with a lot of people. Um, so people who are saying, "Oh, why are you focusing on this?" It's like, why are we focusing on trying to grow our TVL? That's the same question. It's because that's our job, and this is an incredible opportunity. And as we've said, with all the Bitcoin materials, like it's such a unique time and a unique asset because it's like gold. It doesn't produce it. I don't want to argue it's better or worse. I'm saying it's like gold, as it doesn't produce a yield, and you can't really do anything with it. So, like, our community should be like as excited as we are that we're like saying, all right, well, traditional business model continues and the whole world's competing for those capital. And now we're going to go and approach and attach and align our next wave of growth to the growth of Bitcoin. And I've just highlighted like a million different reasons previously why Bitcoin's going to grow and the volume and the capital. And it's now being managed by people, by money managers and companies that need to earn a return on investment, which is why our product is like the perfect fit for all those different reasons. And for us as a company in IXS, we're just trying to grow more channels to more buyers of our products, which is actually what's happening. And so yeah, so that's why it's that's why we've been making so much noise about it. And again, maybe I wouldn't say too much noise, but that maybe we need to clarify that now in our messaging to the community a bit more. This is like a next what we consider to be a killer product that we want to be dominant with. That is just adding more firepower in brackets to our original business and trying to grow TVL and drive token price up on IXS. So everyone should be kind of super excited by that. It is not for retail investors to begin. Um, Again, like we did, we offered the very first RWA that I'm aware of in the world that was real equity token startups for one USDT, and everyone just wants, and most of the community just wants to pump IXS, which is great. That's fine. But my point is, they weren't even interested in buying the real RWA tokens themselves. So now we're going to, we've been focusing on the fixed income products which are liquid, they are product market fit, they are yield bearing, they are usable, and they are the first demanded types of RWA from institutional crypto holders, stablecoin holders, Bitcoin holders. So that's why we've taken this whole direction this year, which I'm super excited by. It's to get real RWA growth from much bigger capital, utilizing an asset they already have in a legal compliant way to drive TVL and value for IXS. So to me, it's like it's the best thing we could be possibly doing.
All right. Thanks for keeping the community up to date. And I guess I just want to quickly touch upon the marketing. Just Julian mentioned, I think we might have overdone and did a good job on getting the BTC name out there. But as they mentioned, this is just a part of what it is that we're offering at IXS. And in terms of the marketing, as a marketing team, we always take your feedback seriously. I mean, we wouldn't be anywhere without the community, definitely. And we're always on there, and we're trying to make a little bit more of a presence, especially in our Telegram channels as well. And as you guys mentioned, there has been a pining interest on IXS and being the whole infrastructure settlement layer. In terms of AMAs and partnerships, there are a number of requests that are coming down the pipeline. It's just a matter of timing this properly, just so that we could fit, of course, the right ones. Of course, we want to, work and get on these spaces with people that are actually within the standard of what we would say a community partner is. And yeah, I guess with that being said, I think you guys also seen that there was a great report done by Tiger Research recently. We will be bumping up and amplifying a lot more of our marketing campaigns and activities as we start into the next month, and we'll see that starting by next week. But yeah, that's a little bit about the marketing. I think one thing that I want to ask here, and I think the community is interesting to know, and I guess either Julian or Aaron can answer this, is but can we get a little bit more, or at least maybe further updates on the decks? I think Julian touched upon that briefly, but I think that we might want to maybe speak about that a little bit more.
I think we've mentioned in previous AMAs that the tech team have been working on the DEX for quite some time now to increase the security protocols on the DEX itself. That has come to an end. The team is finalizing the testing now on the DEX so that it can go live within the next week or two. So that should be live very, very soon, and trading should resume shortly as well for that.
All right, thanks for that, Aaron. It looks like we're about to hit the 1 hour mark here. I guess, is there anything else that you, maybe Aaron or Julian, would like to say before we officially wrap up this AMA? I believe Julian and I still have a call after this. You know, the work never stops, the grind never stops. So, I guess any parting word before we officially end this AMA?
Yeah, no, I think we're on a call with a couple protocols after this. So I think I've spoken enough today. But yeah, look, thanks for the feedback. Um, you'll be seeing more of our activities sort of outside of BTC Real Yield. But again, we'll really emphasize we're here to run the business and to make the best decisions that we think for the biggest opportunity for the business. So um, that's what we're doing. That's our job. So I think some people forget that at times, like yelling and screaming, we should be doing this, we should be doing that. It's like, all right, well, if anyone wants a job, they can send Victoria a resume because I think we're looking for some people. Um, but yeah, we're excited. I think the direction and I think the timing here is extremely good. We all want to see the token price go up with more adoption. So we're driving the best possible, what we think is the most scalable product to drive our TDL. I look over at Maple and see $2-3 billion of BTC um, alt yields. So you put your BTC in, you get altcoin rewards from the Bitcoin layer twos. I see 2 or 3 billion. I think that's amazing. I think they do a fantastic job. I think I've met them a few times. They seem very credible. But 2.2 $2.19 trillion of Bitcoin doesn't participate in that in BTC5 because it can't, it won't, it doesn't trust, it's not structured for, doesn't want altcoin rewards, et cetera, et cetera. So if we can get 3 billion from L2 rewards, I think we can get a much bigger result from real yields. So yeah, excited to continue forward. I'll pass it to Aaron for closing comments.
Yeah, I just want to echo what Julian said. I mean, the reception that we've been getting for the Bitcoin product has been exceptionally good, especially from the TradFi guys, asset managers, where majority of the liquidity is in today's world, right? I mean, Bitcoin has been doing well, but majority of liquidity still needs to come from TradFi at the end of the day. So we're really looking forward to getting this product launched and going, and then we can start seeing the fees and fees flow back to IXS. So thanks everyone for tuning in today. And I'll pass it to Gene for your final comments.
All right. Thank you, everyone, for joining us today. I know there was a little bit of a hiccup when we started the first round, but not to worry. As usual, we usually put out an AMA recap. So stay tuned for that tomorrow, and we will be sending that accordingly. Have a good one, guys. Thank you, Julian and Aaron. Cheers.